Redfin 2025 housing market prediction highlights several key trends. My name is Rizwan Pasha. I'm a broker in Mountain House, California. Let's start with the prediction number one. It is about the home prices. Home prices are expected to rise by 4% in 2025, continuing the steady growth we saw in the latter half of 2024. This increase is driven by a limited inventory and strong demand, creating a competitive market. Unfortunately, for many Americans, these rising prices may put home ownership out of reach, leading some to opt for renting instead. Stay tuned as we explore more insights into the evolving real estate market. So let's review this bar graph. In Q3 2024, it is showing 3%, and Q4 2024, it is showing 4% increase. And rest of the 2025, starting from the Q1 to Q4, the increase is predicted 4%, which is not bad. Prediction number two is about the mortgage. Mortgage rates will remain near 7%. Average mortgage rates are anticipated to stay around 6.8% throughout 2025. Factors such as potential tax cuts and tariffs could influence these rates. Let's review what the data says. On this chart, Q3 2024, it is showing 6.5%, and then Q4 6.7%. From Q1 2025 to Q4, it's 6.8%. Now, given that this is a prediction, what is going to happen in 2025 this year, it all is going to be determined by the Fed rates cut and how the Trump administration is going to handle the economy. So it's all subjective. Just keep that in mind. Prediction number three is about home inventory in 2025. Prediction number three, more home sales due to pent-up demand. Existing home sales are projected to increase with an annualized rate between 4.1 million and 4.4 million, making a year-over-year rise of 2% to 9%. This growth is attributed to pent-up demand through high housing costs may still deter some buyers. Prediction 4 is about rental market. 2025 will be a renter's market. Median house asking rents are expected to remain flat year over year, while wages increase. Improving rental affordability and influx of new rental units is anticipated as developments initiated during the pandemic come to market, leading landlords to offering concessions to attract tenants. Prediction number 5 is about new construction. Fewer construction regulations will lead to more home building. A potential easing of construction regulations could result in increased single-family homes construction. However, it may take several years for this to significantly impact housing affordability. The prediction number 6 is about real estate commission. Under the new National Association of Realtor Commission rules, real estate commissions are expected to slightly decrease, especially for luxury homes and in competitive markets where negotiation is key. The Department of Justice is keeping an eye on practices that might limit competition in the industry, but it's uncertain if further reforms will follow. Stay tuned for updates on how these changes could impact buyers, sellers, and agents alike. Prediction number 7 is about real estate industry consolidation. The real estate industry is set to consolidate with potential support from the Federal Trade Commission. Mergers and acquisitions among larger companies may increase. Traditionally fragmented, the U.S. real estate market, featuring various search sites and brokerages, could see more integration. Expect roll-ups of brokerages, lenders, and title companies aiming to streamline services and maximize business from every customer. Prediction number 8 is about climate risks. Climate risks are being priced into homes, especially in coastal Florida. Natural disaster risks are showing price growth in vulnerable areas like coastal Florida, wildfire-prone California, and hurricane-prone Texas. Many buyers are opting for safer, affordable regions in Midwest and Northeast. Hurricanes like Helena and Milton have pushed many middle and lower income Floridians to consider moving inland, while rising insurance, HOA fees, and property taxes make coastal living less accessible. Coastal Florida may become a heaven for wealthy, with its luxury market remains resilient despite the challenges. The prediction number 9 is about reviving the urban centers. Mayors in blue cities are working to reverse urban flight. Pro-business policies, commitments to reduce homelessness, and tough on crime initiatives are helping revive downtown areas. This shifts combined with big companies bringing workers back to offices could bring residents back to coastal cities, especially in California. Improved housing supply, including ADU constructions in Los Angeles and the Bay Areas, is curbing price growth. Rising costs and extreme heat makes desert cities like Phoenix and Las Vegas less attractive. Meanwhile, self-driving technology is set to make urban and ex-urban living in California more appealing, enhancing commutes and accessibility. The next prediction is about Gen Z. Gen Z is redefining the American dream by moving away from home ownership, while lower-priced homes may see increased demand in 2025. These homes will likely be purchased by older buyers, priced out of higher tiers. Gen Zers are expected to continue renting or living with family into their 30s, focusing on alternative ways to build wealth instead of buying homes. These are the 10 predictions from Redfin for 2025. Let's see. After all, these are just the prediction, and there are many factors that could be impacted. So, hoping for a brighter 2025 for real estate market.